Hi everyone, Ryan here, Ion Capital Solutions. Hope you're doing well. Today I want to talk to you about a product that causes a lot of controversy in the real estate investment funding marketplace, and that is 100% financing. Okay? Loan brokers who are in this space, you know this term well. Usually you'll have a potential borrower throw it in your face when you try and get them to take some hard money, right? And then you'll also hear the horror story about a client who went for 100% financing, and in the end, it wasn't at all what they hoped it would be. There's other topics surrounding this area as well, but we need to discuss this. And as a loan broker in this space, you need to be armed with the correct information and know how to handle objections. And when it comes to 100% financing, when it comes to coverage, there's a reason hard money is usually what's used. There's a reason why 100% financing is used in ads to be able to get people to basically be attracted to apply for funding with that individual or with that group, or get somebody to quickly click and apply or whatever it is. It's a traffic generator, but make no mistake about it, it's a bait and switch. 100% financing looks attractive to the client, but it's not attractive. And in the end, it's certainly more than they bargained for. Anyway, let's dig in. Let's talk about it. Okay, so I have several slides here that we're going to walk through, and there's a bit of information here, so just bear with me as I walk through, okay? But let's hit this first slide. Let's look at 100% financing under a microscope, okay? When purchasing investment properties, getting 100% coverage sounds great to the borrower. I don't need any money down. This is great. This is for me. I want to do it. I'm going to be an investor. I'm not going to have to put any money down. I'm all excited. Here we go. Here we go. If it sounds too good to be true, it's too good to be true. And that's the first thing you should say to anybody considering taking 100% financing if you're trying to sell hard money to them. Okay? The reality is the only way to get 100% financing for the purchase of an investment property is with cross collateralization. Okay? And what this means is you have to have another investment property with enough equity to use instead of cash. So when we're doing a hard money deal, when we ask a client, hey, do you have, what's your liquidity look like? Do you have cash to put down? The client says no. The first question is, okay, do you have property with significant equity where you can eject cash out of equity? So now you'll have the liquidity needed to put down on the deal. That's the best route and bet for the client. But the client doesn't think so. The client thinks it's better to go with 100% financing. They're not thinking beyond the words 100% financing. They don't realize what it actually is. So you have to help them understand what it is. And so 100% financing, you're skipping the cash out refi. Instead, they're just simply collateralizing the property. But there's more here. You see, the lender would essentially have to have a first position on the property being purchased, but also a first or second mortgage on the cross-collateralized property. Okay, and this is where it gets hairy. You see, if the cross-collateralized property is owned free and clear, which means the mortgage is entirely paid off, then you can get up to roughly 70% of that property's value for the purchase. And this is really where you really need to pay attention to the information, right? Because it seems attractive. It seems doable. Okay, I understand. This makes sense, but is it? You see, if we look a little bit harder, realize that not all private lenders will be offering this, okay? And it may take a little bit longer for a deal to close because the lender must do their due diligence on the second property, okay? And here's where the problems begin. It's not quick. It's slow because there's multiple properties there. So now you're going to have a buyer, right, who needed financing right away. And why is it taking so long? And then they lose out on the property or whatever it is. And the headache begins, right? And not many lenders will actually consider a second position mortgage anyway. But the ones that do will likely have higher pricing. And here's some more problems. It's more expensive. Well, hold on. I was getting 100% financing. Yeah, and you're going to pay for it. And in the end, it's going to be more expensive. And this is what the client fails to realize when they've been fooled by the guise of 100% financing, right? You see, interest rates for most first position private mortgages range between 7 and 12%, right? With an average of being around 9 nationally. Okay, but maybe they think, well, that's okay, or maybe that's expensive or whatever it is. I don't like hard money. I don't like hard money. I don't want to put money down. It's expensive, whatever. And they have an emotional reaction to that. But what they haven't considered is the 100% financing that seems so attractive. For a second mortgage, interest rates typically range from 10 to 15%. And it's usually the latter. And so they get stuck with this horror story. Oh my God, I went for 100% financing. It ended up being so expensive, and my ROI was really poor, and I don't know what I'm going to do now, and blah, blah, blah. And they get stuck going that route. They don't have the liquid cash to be able to move forward and go back to hard money so they can have a higher ROI. They don't see this coming. You as a broker need to see this coming. You need to explain the situation to them and help them understand how it works. Because if the cross-collateralized property will have a new first mortgage instead of a second mortgage, the price would likely be the same as if you brought cash to the closing anyway. It's all about perspective. You have to help these people understand how this actually works. You need to be the expert. This is why I'm always saying anybody following this channel as a loan broker, you don't want to be a referral partner just forwarding deals to lenders and promising people the world and not being in the know of how things work. You need to be the expert. You need to be a consultant. That's what's going to help you win and earn money consistently. And it starts with information like this. And if you can't be responsible for this information yet, then you better leverage a mentor. Otherwise, you are going to struggle. Okay? Now, there's other avenues. I mean, we could talk about higher leverage in the form of seller financing, right? This is something else you'll hear from a client. They'll ask you, well, what about seller financing, right? Well, another way to get higher leverage in a purchase bridge loan is with seller carrybacks, okay? And this means the seller would provide a second mortgage to fill the gap between the private lender's maximum LTV, or loan to value ratio, and the purchase price. Okay. Now, while some private lenders are okay with this, they will not consider it when the borrower is not putting any of their own cash into the deal. So it's not possible to get 100% financing with this scenario anyway. Okay. So know what your client's going to come back at you with, right? When you try and talk them off a ledge with 100% financing, they're likely to come back at you with seller financing. The borrower is forever trying to find an angle and find a way for it to be cheaper for them. Right? You have to be familiar with this conversation and know where it's going and head it off before it gets there. And in turn, you become the leader. In the eyes of the client, you are the expert. They're following you without realizing it. And that's exactly how you want to position yourself. You don't want to be a niche product salesperson selling rates and terms and trying to convince somebody that your product is better than everybody else. You want to be an expert consultant and help them understand how the space actually works. Be that financial expert, that member of their team, that go-to, that can provide long-term financing and financial planning. That's how you want to be perceived by the borrower. Okay, but back to the topic. You see, if a lender is willing to fund up to 70% of the purchase, they may be okay with putting 10% down, putting 10% down. And the seller can finance the remaining 20% with a second position mortgage. So that's how it works. And if there's a direction they want to go, sure, but you need to explain the situation to them and how it works, how it doesn't work. Very important. Okay. And if we take a deeper look here, funding a second mortgage for the purchase of a property is commonly known as gap funding. Okay. And you'll hear your clients say that. Do you provide gap funding? But what you have to understand is it's nearly impossible to find a private lender that's willing to fund a second mortgage for the purchase of a residential property. Okay. In the past, this has resulted in just too many foreclosures, too many properties stuck in forbearance. It's not going to happen. Right? So don't promise the client the world. I need gap funding for residential property. Oh yeah, we can do that. You're setting yourself up for a fall. Know what's doable, right? Because the reality is there are some private lenders that offer second mortgages for the purchase of commercial real estate. Okay? This is commonly referred to as mezzanine financing or preferred equity. Okay, so yes, we can do that, but you have to know the difference between residential and commercial when it comes to gap funding, what's doable and what's not doable. Because if you overpromise and underdeliver, you're going to lose the client. You need to be the expert. Stop reading from the capabilities packet provided to you by the lender. Stop assuming that you can just automatically build a business because you developed a website and signed up with a couple lenders as ISOs and referral partners, and now you're just a loan broker. It's not that simple. You need to be the expert. You need to know what's doable. Otherwise, you're just gambling and betting on files funding, and inevitably it'll crash and burn. You need to become the expert. If you're not the expert, you have to leverage expertise and surround yourself with expertise to accrue knowledge over time through experience, right? Now, loan amounts are typically no lower than $1 million, and the investor will need to contribute roughly 10 to 15% of the purchase price in cash. So if you have a commercial deal, you want to do some gap funding, well, understand how it works. Okay, understand how it works. Purchasing below market value properties. Okay. Sometimes, essentially, the investor thinks by buying an off-market, way below value property that it'll make a difference to the lender, right? And that's leverage against the lender. It's not. It's not, okay? Most private lenders will not take this into consideration. That's because they consider the purchase price as the value. And yet we'll see a lot of real estate investors use the perceived value amount when they state the loan to value to the lender, which is incorrect. Right? Just because they put it on the app doesn't mean that's what it is, right? Or that just because they believe that that's what they deserve doesn't mean that's what they're going to get. And so understand that if you're buying a property and not adding any value to it during the loan term, a private lender will primarily focus on the purchase price. And many use the acronym LTP, which is short for loan to purchase price, okay? And that's where we get that term from. But understanding how it works is paramount. Okay, and understanding what's realistic and what's not is just very important. Because the reality is a lot of deals will fall apart because investors have unrealistic understanding of property value and therefore unrealistic expectations of what's available to them. And if you allow them to believe this when they inevitably hit ground and realize that what they want is not possible, they're going to be mad at you. They're going to be mad at the lender. They're not going to want to deal with you. So when you deal with a client early on and you hear this kind of thing, you see this kind of song and dance, you need to stop them dead in their tracks. Whoa, whoa, whoa. That's not how it works. I don't know who informed you that's how it works, but they are wrong. And if that's your belief, you are wrong. And it's not going to work out for you. And if that's what you're looking for here, next. And that's got to be your mentality and your positioning on this. And if that's the case, you won't waste your time. And that makes all the difference as a business loan broker. Don't waste your time. If you waste your time, you're not going to make money. How many people are you talking to right now, if you're an active loan broker, not having the real conversation, the deal ends up going south? How long can you hang on doing that? You need to become the expert and learn these things. Right? So, back to the point. If not 100% financing, right, then what's the max loan to purchase price, the LTP, right? Well, max LTV, again, loan to value ratio, right, is for most short-term purchase bridge loans is roughly 70%, rarely as high as 75%, but it does happen, okay? The maximum for vacant land is 50%, okay? So understand that land is different than the actual property or real estate, right? With that being said, anything higher than that just doesn't make sense for the private lender. So it's important to understand the difference between these things, right? And that's a promise more to the client. You get a client who says, can you go up to 80, 85? And if you're not sure, you just say yes to get the app in. You're just setting yourself up for a fall. Or somebody says, I want nothing less than 75%. You say, yep, I can do that. You're just setting yourself up for a fall. Help them understand it's rare. I mean, it's possible you get 75, but we need to take a harder look. You know, it's the rare file that makes it to 75%. What about your file jumps off the page that is going to make the lender provide 75%? Push back at the client. Don't just offer them the best pricing. It's like trying to say somebody, you're going to get the lowest possible rate. How do you know that? Just because you offer a rate, and this is just for the sake of example, between 5 and 10, and you say to them, oh, you're going to get 5, and then they get 7, they're going to flip out, right? You can't do that. Very, very important. Yet so many people do. And how do I know that people do this? Because they're offering 100% financing. Because you're looking for the most attractive thing to say to the client to get them to apply with you. but then it doesn't work out. Bait and switch, overpromise, underdeliver, you're setting yourself up for a fall. It's just the truth. Many new brokers do this. You get awfully confident, and then all of a sudden your tail's between your legs because it's not working out. Anyway, generally lenders require a down payment of at least 30%. And that's got to be your rule of thumb, okay? And at the very least, they're just going to want to see liquidity of 30%. Okay, so any client you talk to, make sure that that money's there. Make sure that they can show that. That's the wheelhouse you want to play in, okay? And for vacant land, the minimum down payment is 50%. They say land, you say 50%. Be ready with that, okay? And if a lender is more conservative based on the property type, location, and other factors, well, you'll need a bigger down payment, right? So you want to make these things clear. This is not limitations, your limitations. This is how the industry works. And you need to explain that to somebody. You're not going to get better terms elsewhere. And if somebody's promising you better terms elsewhere, they're lying to you. This is how the industry works. Are you familiar with how the industry works? Do you have unrealistic expectations? You want to spin your wheels and lose this property in the next one and get frustrated and angry? Okay, keep going down that road thinking this way, but you're wrong, Mr. and Mrs. Client, right? But I'm an expert in this field and I can explain to you how it really works. And if you operate within the system, you understand how it works through a relationship and positive credit history of repayment, we can begin, to provide better terms because that's how it works. There's no beating the system. Okay? And so the reality is some private lending companies offer long-term financing, whether it be 5, 10, or even 30 years, okay, for residential rental properties. The max LTP for these loans can go up to 80% if you have good credit and the property is in a primary market. Okay, so yes, it's possible that there's a greener pasture, but know what it is and how it works. Okay? If you're in the know of these things, you understand how it all comes together, and you can properly explain this information to the client calmly and help set realistic expectations and properly qualify your client, you will find success. If you don't do this and you don't know this information and you overpromise and underdeliver and you bait and switch, it's going to blow up in your face. Okay? And the next time a client tries to throw seller financing or 100% financing in your face, you should be ready and you should laugh and you should help the client understand that this is a very important call and you're going to help save them from a huge mistake. Okay? Anyway, that's going to do it for this topic. Thanks so much for your time today. I'll catch you in the next video.